vastly exceeded expectations with a record gain of 2.5 million jobs after experts had predicted nearly 8 million loss. While the unemployment rate is still historically high, we are seeing additional signs that conditions will improve significantly in the third and fourth quarters of this year. The Blue Chip report is forecasting our GDP will grow by 17% annualized in the third quarter and by 9% in the fourth quarter. The U.S. Chamber of Commerce reported this month that 79% of small businesses are at least partially open, and half of the remaining businesses are opening very soon. Retail sales rose in May by 18%, more than double the expectation. Investors in business have historically high cash positions, the highest level since 1992, indicating that private capital is ready to return as communities reopen. We are in a strong position to recover because the administration, working with Congress on a bipartisan basis to pass legislation and provide liquidity to markets in record time. In particular, the PPP is keeping tens of millions of employees connected to their jobs. Economic impact payments are also helping millions of families and workers through these challenging months. We are monitoring economic conditions closely. Certain industries, such as construction, are recovering quickly, while others, such as retail and travel, are facing longer impacts and may require additional relief. We look forward to continued conversations with you to address these critical economic issues. Treasury has been hard at work implementing CARES Act program. The PPP, we've approved over 4.8 million small business loans for $519 billion. Economic impact payments, we distributed nearly 160 million payments in record time. Programs to support aviation and other eligible business, we have approved and dispersed over 27 billion to over 500 airlines and other aviation business, preserving hundreds of thousands of jobs. We're in the process of documenting loans to business and critical national security for approximately $25 billion. The Coronavirus Relief Fund, from this fund we've distributed $150 billion across states and local governments, nearly half of all in additional money to tribal governments. The CARES Act also granted Treasury the authority to provide $454 billion to support Federal Reserve lending facilities under Section 13.3. Since March 17th, using funds available, I have approved a number of Federal Reserve programs: the Commercial Paper Program, the Primary Dealer Program, the Money Market Mutual Program, the TALF, the Primary Market Corporate Credit Facility, the Secondary Facility, the Main Street Facility, the Municipal Facility, and the PPP Lending Facility. We have committed approximately $200 billion, and to support these, the announcements of these programs have helped unlock markets and promote much-needed access to liquidity. We have over $250 billion remaining to create or expand programs as needed. While we're beginning to have conversations about supplemental relief legislation, we look forward to working with Congress on a bipartisan basis in July on any other further legislation that will be necessary. Treasury has already been entrusted with a tremendous amount of funding to inject into the economy. We are closely monitoring these results and seeing conditions improve. We would anticipate that any additional relief would be targeted to certain industries that have been especially hard hit by the pandemic, with a focus on jobs and putting all Americans back to work who have lost their jobs through no fault of their own. The Treasury Department is implementing the CARES Act with transparency and accountability. We are providing information to the government-wide reporting on USA spending and updates to Congress. We're also cooperating with the Congressional Oversight Committee, GAO, and others. We are pleased that the Federal Reserve has announced plans to boost loan information on its website regarding its facilities. Chair Powell and I have had very productive initial meetings with 4 members of the Oversight Committee, and we look forward to continuing to work with them. Thank you very much.
Thank you. Chair Powell, you are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and other members of the committee, thank you for the opportunity to testify today to discuss the extraordinary challenges our nation is facing and the steps we're taking to address them. We meet as the pandemic continues to cause tremendous hardship, taking lives and livelihoods both at home and around the world. This is a global public health crisis, and we remain grateful to our healthcare professionals for delivering the most important response, and to our essential workers who help us meet our daily needs. These dedicated people put themselves at risk day after day in service to others and to our country. Beginning in March, the virus and the forceful measures taken to control its spread induced a sharp decline in economic activity and a surge in job losses. As the economy reopens, incoming data are beginning to reflect a resumption of economic activity. Many businesses are opening their doors, hiring is picking up, and spending is increasing. The economy has entered an important new phase and done so sooner than expected. While this bounce back in economic activity is welcome, it also presents new challenges, notably the need to keep the virus in check. While recent economic data offer some positive signs, we're keeping in mind that more than 20 million Americans have lost their jobs and that the pain has not been evenly spread. The rise in joblessness has been especially severe for lower-wage workers, for women, and for African Americans and Hispanics. This reversal of economic fortune has caused a level of pain that's hard to capture in words as lives are upended amid great uncertainty about the future. The path forward for the economy remains extraordinarily uncertain and will depend in large part on our success in containing the virus. A full recovery is unlikely to occur until people are confident that it's safe to engage in a broad range of activities. The path forward will also depend on policy actions taken at all levels of government to provide relief and support the recovery for as long as needed. The Federal Reserve is strongly committed to using our tools to do whatever we can for as long as it takes to provide some relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. After lowering the federal funds rate to essentially zero, our actions so far fall into 4 categories: stabilizing Treasury and agency MBS markets, money market and liquidity and funding measures, direct efforts to support the flow of credit in the economy, and targeted regulatory measures to support those efforts. So far, we've created 11 facilities under Section 13(3) of the Federal Reserve Act to support liquidity, funding, and the flow of credit to households and businesses and state and local governments. Without access to credit, families could be forced to cut back on necessities or even lose their homes. Businesses could be forced to downsize or close, resulting in further losses of jobs and incomes and worsening the downturn. Our emergency lending facilities have all been undertaken with the approval of the Treasury Secretary, and many are supported by funding from the CARES Act. Their status and effects are discussed in greater length in my written statement, which I've provided to the committee. The Fed will continue to use these powers forcefully, proactively, and aggressively until we're confident that the nation is solidly on the road to recovery. When the time comes, after the crisis is past, we will put these emergency tools back in the toolbox. I would stress that these are lending powers, not spending powers. I will also note that we design our facilities to work for broad ranges of businesses and municipalities. We do not target particular firms or industries. Elected officials have the power to tax and spend and to make decisions about where to direct such targeted relief. The CARES Act and other legislation provide direct help to people, businesses, and communities. This direct support is making a critical difference, not just in helping families and businesses in a time of need, but also in limiting long-lasting damage to our economy. Public faith in our operations depends on transparency. At the Fed, we're committed to that transparency, particularly in deploying our emergency powers. Thank you. I'll look forward to our questions.
Thank you very much, Chairman Powell. I now recognize myself for 5 minutes for questions. As I mentioned in my opening, the pandemic is strengthening, and so, too, must our response. 2 weeks ago, Chair Powell, when I asked you about the need for more congressional action to protect our communities, you said, and I quote, "There are something like 25 million people who are still dislodged from their job in full or in part due to the pandemic. I would think it would be a concern if Congress were to pull back from the support that it's providing too quickly," end quote. Unfortunately, tomorrow this is exactly what will happen if the Senate does not pass the HEROES Act. Tomorrow the PPP program stops taking new loan applications. The PPP should be extended immediately so that the remaining $135 billion in funding can support small businesses. Also happening tomorrow, millions of families will be unable to pay their rent and mortgages. In June, 1/3 of renters couldn't pay rent. 4.2 million homeowners are currently in forbearance because they're unable to pay their mortgages, and evictions have already started in many states where local eviction moratoria have expired. While the moratoria should be extended, it is not conscionable to simply delay an eviction and foreclosure crisis. Congress and the administration must provide support to struggling low-income families to cover their rent and utility payments. So, Chairman Powell, millions of families are at risk of being stripped of their home. Do you think Congress should provide financial assistance to ensure people stay in their homes?
Thank you, Madam Chairwoman. So I tried to keep my fiscal comments at a very high level, and that comment you referred to was referring to the unemployment insurance that expires at the end of July. And I think for the specifics of what you need to be doing, I think we have the Treasury Secretary here, and I would defer to the Treasury Secretary on fiscal matters here.
Okay, so you put it off on Mr. Mnuchin. So while you have made some changes to broaden the municipal liquidity facility, many jurisdictions like the territories are still locked out. When we last spoke, you mentioned that it was difficult, but perhaps there was a way that Guam may be eligible. Did you find a way to take a serious look at that and determine whether or not something could happen?
Yes, we are taking a serious look at that. So the territories themselves are not investment grade rated, and they weren't before the pandemic set in, and that's the minimum standard for access to the municipal liquidity facility. Of course, businesses in the territories would be eligible for the Main Street facility. Some of the revenue-based facilities that Guam has are investment grade rated, but below the minimum, and we're actually reviewing our credit standards in the municipal liquidity facility at the moment to determine if there's a way to adjust the facility in a way that would make eligible some creditworthy issuers without sort of violating the spirit or letter of Section 13.3.
Thank you. Secretary Mnuchin, with critical unemployment support expiring next month and today marking the last day that Treasury and SBA claim that new PPP loans can be approved, does the administration support extending these programs as proposed in the HEROES Act?
Well, we do support additional legislation, and we look forward to working with the House and the Senate on that. As it relates to the PPP, I've already had conversations with the SBA committee in the Senate about repurposing that $135 billion and think that should be done, and look forward to working with both the House and the Senate so that we can pass legislation by the end of July.
Thank you very much. I now yield to
Maybe not.
no. The gentleman from North Carolina, Mr. McHenry, is now recognized for 5 minutes.
Well, thank you for your testimony. Secretary Mnuchin, I think there's wide agreement that your engagement in the PPP program made things largely better, right? The Treasury expertise in making sure that SBA could deliver on this really seminal program of the CARES Act. It's proven out because you got 4.5 million small businesses that have benefited from it. The average loan size is quite modest in the context of our economy, but the effect is pretty wide scale. So what would you say regarding the additional funds that are purposed for PPP? What should be our focus as policymakers on repurposing that $134 billion? How can we best do that? Is that the 7A program? Is that expedited loan programs? How do you see this fitting in, given the actions of Main Street and the other facilities you've stood up through the Fed?
Well, thank you, and I appreciate your comments. I think at the time when we passed the last CARES Act, the economy was in very difficult shape, and we needed to get money quickly. And as I'd said before, programs that took 3 or 4 months were not the focus. I think that there appears to be bipartisan support in the Senate to repurpose the $130 billion for PPP, extending it to businesses that are most hard hit, that have a requirement that their revenues have dropped significantly, things like restaurants and hotels and others, where it is critical to get people back to work.
Okay, and so that seems like a reasonable step in the right direction. Chairman Powell, the reputation you've garnered this year in particular is that your actions have been predictable and that you signal what you're going to do and you follow through on it. Transparent in that you lay out the metrics for action, you therefore follow those metrics. Incredible. One example is that at announcement, you said that you're going to support corporate bonds. And by saying that you're going to support corporate bonds, the market acted as if the Fed already had the program up and running, to the point where once you were up and running, people asked why you followed through on that program. Now, I think that's important to note. That transparency, that guidance, that communication has been effective in this opening stage in setting up these responses. So along those lines, the Fed took what I would call strong medicine in terms of action on the stress tests to restrict dividends and buybacks and restraints on these large financial institutions. I would call that quite strong medicine. I think what we want to understand are the metrics that the Fed is going to use in order to make these judgments and assessments sort of in this next phase over the next couple of months for these large financials.
So I think you have to start with the sort of two major facts here. One is that the banking system is very strong, has been a source of strength. The banks have been taking on a wave of deposits. They've been engaging in forbearance. They've been making loans. So they're a source of strength in this situation, unlike the last crisis where they were a source of weakness. It's also a fact that things are highly uncertain. And so to preserve that strength, what we've done is we've stopped all share repurchases and we've stopped increases in dividends. So we're preserving the level of capital in the system. So to address the uncertainty and looking forward, we did run these three sensitivity analyses, and they were really to assess the overall strength of the system in the face of these downside cases. We found that the majority of firms were still adequately capitalized, sufficiently capitalized in all of those scenarios. Notwithstanding that, what we did was that we said for the first time in the history of these tests, we said that we're going to ask the banks to resubmit their capital plans. We're going to distribute scenarios, and we're going to look at the results again as we learn more about the path of the crisis. And in terms of the precise metrics we're going to be looking at, we'll be providing more clarity about that going forward.
But based off that uncertainty, you want to you're asserting as a regulator that you will actively review this to ensure that we don't have a financial crisis as a result of this health crisis.
Yes, we're going to keep monitoring this. We're learning so much every quarter, and the path of the economy is highly uncertain. And you know, in our system, dividends are declared every quarter. We've already stopped the overwhelming majority of distributions, so we think that's the right place to be.
Thank you. Thanks for your leadership and effectiveness, and thank you as well, Secretary Mnuchin, for your effectiveness and leadership. Yield back.
Thank you. I now recognize the gentlewoman from New York, Ms. Maloney, for 5 minutes.
Thank you and welcome. Secretary Mnuchin, I'd like to ask you about a very troubling oversight issue. As you know, I'm the chair now of the Oversight Committee, and I take these matters very seriously, and I hope that you do too. In the CARES Act, we created the Pandemic Response Accountability Committee, or PRAC, which is a committee of independent inspectors generals that is charged with overseeing all of the money spent in the CARES Act and identifying waste, fraud, and abuse. Last month, the General Counsel's Office in Treasury issued a legal opinion that questions PRAC's authority to oversee trillions of dollars of CARES Act spending. To put it bluntly, this legal analysis is so bad that it borders on bad faith. The opinion claims that no evidence that Congress did not intend for the PRAC to have oversight authority over anything in the first half of the CARES Act, including the PPP program and any of the Fed's lending facilities or the $150 billion in funding for states and local governments. So I would say, Secretary Mnuchin, that this interpretation is wrong, that it is just plain wrong. Senator Gary Peters and I proposed and authored this section of the law, the PRAC Act, and I was heavily involved in negotiating those provisions in the CARES Act. And I'm telling you that Congress's intent was for the PRAC to oversee all of the spending in the CARES Act, not just one half of the CARES Act, but all of it. That was our intent, and that was what the bill said explicitly. The interpretation from your general counsel's office is already causing problems because it's hindering the PRAC's ability to monitor how the states are spending their CARES Act money. So now, Secretary Mnuchin, I would say that we have worked very productively together and in good faith negotiations on the beneficial ownership bill and other bills before Congress. So I hope that you'll take my concerns about this erroneous legal opinion seriously. And so this is what I would like to ask today. I'd like you to commit to interpreting this section of the CARES Act as Congress intended, with the PRAC's oversight authorities applying to all of the CARES Act spending. I think this is a small step, but a very important one that you can take to show that you're serious about the oversight of the trillions of dollars in the CARES Act.
Well, thank you, and I appreciate your comments, and I assure you we are very much committed to working with the oversight committees on transparency. Now, as it relates to this, I can assure you it was not bad faith. I'm happy to have our office follow up with you. It has to do with a technical issue of recipients reporting. As it relates to the issue of monitoring state spending, I'm more than happy to put the PRAC in touch with our Inspector General, who has primary oversight, and make sure that whatever information specifically the PRAC wants on the states that we accommodate.
Well, I would say that that's not what I'm asking. What I'm asking is, will you commit to interpreting the PRAC's oversight authorities as applying to all of the CARES Act spending? That was our intent. I wrote that section of the law. That was what Congress wanted. There's no problem with the interpretation. It's very clear and explicit. Will you commit to allowing the oversight that was in the bill?
Well, I appreciate you wrote that portion. I would also say I appreciate I had very direct discussions with people in the Senate about various different oversight. That's why we agreed to a new oversight committee with full transparency. We agreed to provide information that was not required under 13.3. So we have full transparency. And again, I'm happy to follow up with you on the specific concerns as to which different entities should receive what information. I think it's important that there is not bureaucratic overlap, but again, let me emphasize, if the PRAC needs certain information, we will try to do what we can to accommodate it.
Well, I'm very disappointed with that answer, and I guess we'll have to pursue a legislative solution. It was very clear that the intent of Congress is that PRAC would have oversight of all of the CARES spending. I yield back. And I'm out of town, out of time.
The gentlewoman from Missouri, Ms. Wagner, is now recognized for 5 minutes.
Thank you, Madam Chairwoman, and thank you for joining us today, Secretary Mnuchin and Chairman Powell. I want to commend you both on the outset here for your leadership during this unprecedented time. Both the United States Department of Treasury and the Federal Reserve System have shown their ability to both effectively and rapidly respond to the economic crisis caused by COVID-19 by providing trillions of dollars to stabilize our economy. Chairman Powell and Secretary Mnuchin, lender registration for the Main Street lending program went live on June 15th, I believe. Do either of you know how many lenders have registered so far, and do you know the average size of the lenders participating? If not, when do you think this information might be made available? I'll toss it to either.
Sure. So in the range of 300 banks and it may be higher than that, that number's a few days old, have entered the registration process. It takes a few days, so I can't tell you exactly how many, but that's how many will come out of the pipeline.
Average size of lenders
Don't
participate?
know. The size ranges from, you know, the large to the very small, and the very small are particularly well represented, but it does range across the full spectrum.
And you will be providing this information to us for,
Yes,
on a
so
regular basis?
We're working with the borrowers to figure out the right way to, you know, connect lenders and borrowers and lenders so they can get in touch with each other. So we're working with the lenders to put something together that will make that happen in the most efficient way.
Thank you. Chairman Powell, in your efforts to create broad-based programs, do you think that the Main Street facility will need to expand any further to meet the needs of our businesses?
Let me say as you've seen, the Secretary and I have worked very closely on this, and we've been very willing to learn from experience and learn from what we're hearing from different parts of the economy. So
We certainly did with the PPP program, so I would hope that we would approach this the same way.
We will. I mean, as you know, we're in the relatively early stages of opening up a nonprofit Main Street facility, and I think we'll be watching as regular Main Street you know, fully comes online and continuing to look to see whether there are ways we can improve it.
Thank you. Chairman Powell, last week's release of the Federal Reserve's CCAR outcome and, more importantly, the results of their COVID-19 sensitivity analysis underscores the resilience, I think, of the banking system. While we can all agree that the level of uncertainty in the economy continues to be high given the progression of the COVID-19 pandemic, I believe the Federal Reserve subjected CCAR filers to extraordinary assumptions regarding unemployment and GDP contraction. Despite these assumptions, the 33 largest banks remained above minimum Tier 1 capital requirements. Given that, I'm wondering why the Federal Reserve has indicated firms will need to resubmit capital plans, and in addition, there will be an off-cycle supervisory stress test in the, quote, latter part of the year. You know, the Federal Reserve already concluded firms' capital planning, management processes, I think approaches and assumptions pass the toughest tests. So could you explain that, please?
Sure. So what the 33 institutions all passed was the regular way severely adverse scenario that we wrote before the pandemic arrived. So that's what controlled the outcome at this time. We also, though, remember the pandemic arrived right in the middle of the stress test period. So we quickly devised, without going through our usual very thorough vetting process, 3 alternative sensitivity analysis, one of which was a V-shaped recovery, one of which was U-shaped, and one of which was a serious double dip. And these are very serious downside cases. We didn't use them to evaluate individual institutions, but rather to evaluate the broad range of institutions, and we didn't.
I'm running out of time, and I just, you know, why lock up additional capital now? I guess this has the potential to have, I think, a chilling effect on the economy at exactly the point where banks need to provide credit and liquidity to households and businesses to facilitate economic recovery and support financial intermediation in the capital markets. So I leave you with that.
We didn't do that. We're not looking to raise capital standards during a crisis. That's not what's going on here.
Thank you for that clarification, and I yield back.
Thank you. The gentlewoman from New York, Ms. Velasquez, is now recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member. Mr. Secretary, at any time have you been blocked by President Trump or anyone else at the White House from providing access to information requested by Congress or an oversight body?
No.
Have you ever been prevented? Have you ever prevented anyone within the Treasury Department or the administration more broadly from providing access to information requested by Congress or an oversight body?
Well, if you're referring to an oversight body, not that I'm aware of, no.
Okay, so here you are, sir, tonight the PPP program expires. And you are advocating for extending that authorization. So you are telling us that you are already discussing this with the Senate. But there is a role for the House. And so,
Of course.
yes, and I will remind you that nothing will move unless we have those conversations. As chair of the House Small Business Committee, I cannot be able, in good sense, to make a determination as to where the program should go or what tweaks or what reforms the program needs unless we have access to the data. When are you going to provide the data to our committees?
I believe we said by the end of this week, and we've reached out to your committee to make sure we establish secure.
No, we got a letter, but no date has been.
It's supposed to be delivered by the end of this week, so I will assure. And let me just say, I'm more than happy to speak to you if you'd like to set up a time to speak.
Sir, we have been contacting your office every week, asking for you to appear before the Small Business Committee with the administrator. I spoke to her last week. She intends to come before the committee. Okay. You are saying here that we need to take care of those most hard-hit businesses in this next repurpose of this $135 billion that are left. But we need to know if the program worked as intended by Congress. We know that 4 million businesses access the program. But what about the millions of minority and women-owned businesses that were not able to access the program? So you're saying maybe a restaurant might need to get a second loan. I just heard Senator Marco Rubio. Well, no one should get a second loan unless we know that most businesses who are struggling get a chance to get a loan. Chairman Powell, as chair of the House Small Business Committee, I am particularly concerned about the state of our nation's small businesses as the pandemic poses an acute risk to their survival. How would the failure of small businesses, especially those that are women or minority-owned, adversely affect the communities they serve, particularly those of color? What impact could these failures have on future labor market conditions?
Of course, the effects could be very significant. Small businesses generate most of the jobs and most of the growth in the economy, so that could be very important, particularly in minority communities.
Chairman Powell, earlier this month, the OECD said the pandemic has triggered the most severe recession in a century and warned that the global economy could contract by 7.6% this year should a second outbreak hit. Do you agree with this assessment?
That particular number, there's a range of assessments, but I would say that that's in the range, and yes, I can't think of a more.
And what impact do you see a second outbreak having on both the U.S. and the global economy?
Well, I certainly wouldn't forecast that, and so this just hypothetically, a second outbreak could force governments and force people to withdraw again from economic activity, and I think the worst part of it would be to undermine public confidence, which is what we need to get back to lots of kinds of economic activity that involve crowds.
Thank you. I yield back.
Thank you. Mr. Lucas, you're recognized for 5 minutes.
Thank you, Madam Chair. Chairman Powell and Secretary Mnuchin, thank you for attending this hearing today. And I want to begin by commending Chairman Powell on finalizing the inter-affiliate margin rule. This may be the last time we discuss this, sir. While these rules may seem abstract and difficult to understand, they have a real impact on agriculture and oil and gas producers back home that use financial derivatives to manage risk and plan for the future, which, as we've seen in past months, can be, to put it mildly, unpredictable. That said, as both of you know, commercial paper finances a wide array of economic activity and provides liquidity for companies to meet their operational needs. With the commercial paper market under significant strain due to COVID-19, in mid-March, the Federal Reserve established the Commercial Paper Funding Facility to encourage investors to lend in the commercial paper market, which ultimately supports businesses and jobs across the country. Chairman Powell, could you describe the current indicators of how the commercial paper market responded to the creation of the facility? And has there been a discussion, I should say, to expand the facility to address liquidity issues faced by Tier 2 issuers?
So the commercial paper facility has substantially healed. As you point out, it really closed there in the beginning part of March, as so many markets did. And when we announced the facility, the highest graded borrowers were able to start borrowing. And so largely, but not completely, that market has returned to fairly normal function. And we're watching it carefully. I would say we're not currently assessing whether to broaden that facility, but should the situation deteriorate, we would have that as an option.
Thank you. Secretary Mnuchin, there have been reports that China is restricting global agricultural imports due to COVID-19. How are we working to resolve this with China, and do you anticipate this impacting the terms of the Phase 1 trade agreement to purchase $200 billion in U.S. goods and services, particularly the commitment to purchase $40 billion in U.S. farm products?
Well, let me just first emphasize we have various serious concerns about the lack of transparency from China as it relates to COVID. Having said that, we have every expectation that they will support and live up to the Phase 1 agreement, and they are well on their way for those commitments.
One last question. Native American tribes have been hit particularly hard by COVID-19. Tribal employment is often concentrated in arts, recreation, and accommodation industries. How has the Federal Reserve and Treasury been looking specifically at the economic challenges faced by tribes?
I can answer as to Main Street. Of course, the tribal businesses are eligible for participating in Main Street, and that's where a lot of the economic activity is there. The tribes themselves are not really general obligation issuers, so they're not particular candidates for the municipal facility.
Thank you. And with that, Madam Chair, I yield back the balance of my time.
Thank you. Mr. Chairman, you are now recognized for 5 minutes.
Thank you. Secretary Mnuchin, I'm a very nice guy, so I won't mention the press reports that say that over $1 billion in stimulus payments have gone to people who are deceased. But I will urge you to adhere quickly to the agreement that you've made with the Senate Small Business Committee to very quickly release the names and data about all PPP borrowers that have borrowed over $150,000. Chairman Powell, back on March 12th, I sent you a letter urging that you prohibit stock buybacks by banks. You have done so. Thank you very much. About 2 weeks ago, you went on the record to say, I would think that it would be of concern if Congress were to pull back their support, having just said that there are 25 million people who have been dislodged from their job. I thank you for that advocacy, and I hope Congress listens. We need to do more to stimulate this economy under these circumstances. Secretary Mnuchin mentioned the support that he's providing to local and state governments, but that is all in the form of loans, and of course, almost all state and local governments can't run a deficit. So with their revenues down by hundreds of billions of dollars, I hope we pass the HEROES Act and actually provide aid to state and local governments. One issue, Chairman Powell, for the Main Street lending program that is particularly relevant to commercial real estate is that if they get a loan from you, they violate the loan covenants that they have in their existing mortgage. I look forward to working with you on that. One possible solution is the bill that I submitted, and we've had hearings on in this committee, the Business Borrowers Protection Act. Certainly, getting a loan on a program that we've authorized because of the COVID crisis should not trigger and make a pre-existing mortgage immediately due and payable. I want to spend this morning at the White House with a few of our colleagues getting briefed on Russian involvement in Afghanistan. And it appears to me, Secretary Mnuchin, that they have been bold. They have killed our soldiers because when they do something else that we catch them on, we don't sanction them very much. The debate now is whether they took the obscene step of putting a bounty on the heads of individual soldiers, or whether they've limited their involvement to Afghanistan to just aiding the Taliban, but not correlating that aid to how many dead Americans this or that operation created. Of course, the response from the administration to this seems to be, well, let them into the G8 and otherwise help them. That kind of lax response will lead to more deceased American soldiers. Under the Chemical Weapons Act, which Congress passed a couple years ago, your department was supposed to sanction Russia for their violation of the Chemical Weapons Act when they used poison to try to assassinate a Russian dissident in Britain. But you opted for the weakest sanctions allowed by the act. It doesn't apply to ruble what it does is it prohibits certain loans from Americans to the Russian government. But it doesn't apply to ruble transactions. It doesn't apply to loans to state-owned enterprises. And it apparently doesn't apply to purchases in the secondary market. Given the fact that our under-sanctioning of Russia has led at least to their aiding the Taliban in a general sense, and according to press reports has led to the specific putting a bounty on our soldiers, could you revisit your decision on this existing law and impose these bans on ruble transactions, state-owned enterprises, and secondary markets?
Well, you covered a lot of things.
It must be a tough question. You took off your mask.
Let me just comment on, we believe we followed the law and selected amongst a series of items at the time, but I'm happy to go back and I recall the situation. I'm happy to go back and look at it again.
There are credible reports that they put bounties on our troops. Please look at it again.
Well, again, on that, I just want to be clear. So for the record, I am not commenting on classified information, nor do I think it's appropriate in this setting to talk about alleged information that's in the press.
Mr. Posey, you are now recognized for 5 minutes.
Thank you, Madam Chair and Ranking